What's up everyone, it's Scotty with MoneyVest. So it's time for our weekly technical update on the Magnificent Seven and big tech stocks. So in this video, I'm going to break down these 8 companies, including Nvidia, of course, AMD and Netflix as well. And we're going to talk a little bit about the market technicals. We're going to go over percentage of stocks trading above or below their moving averages, volatility analysis, S&P, NASDAQ, and all these individual stocks as well. All I'm asking in return is that you drop a like and subscribe to the channel if you find this video helpful and valuable, and if it brings you insight into your trading going into next week. That's the whole idea and whole purpose of these videos, is to kind of help you identify really important levels to watch, support and resistance levels, so you can make your trading more aligned with your decisions. In other words, have a much better understanding of where those supply, resistance, and of course support and demand levels are, and of course the overall trend for these individual stocks, and how to kind of go about formalizing and creating those plans for trading in the upcoming weeks. So again, hope you guys enjoyed, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. And definitely do check out our Patreon. There is a 16% annual discount for another 8 days. And that after December is going to expire. You can get access to all the Excel spreadsheets, all my fair values, including our Discord access with over 20 plus channels, including all the buy and sell alerts, options alerts, trade ideas. And I do want to mention that tomorrow is Christmas. So a very Merry Christmas to you and your family. Hope you all have a fantastic day. Markets are going to be closed, and this is going to be one of our biggest sales of the year, Christmas sale for all the courses. Coupon code is going to be Santa Rally. Link's going to be down below. Lifetime access, and do connect with me on Instagram as well, because I do post a lot of behind the scenes, a lot of interesting stories, portfolio updates, trades, all that over there as well. So starting with volatility, we are low on the VIX, as we already know. And of course, if you take a look at where the VIX is right now, we are at just over 13. So this is where we are at the moment, and we have been trading at these low levels that we haven't come down to in over 2 years, which is again quite interesting, as the market of course bottomed out in October of this year. Not really bottomed, but we did see a pretty significant pullback for the markets. So July was the peak, then we saw a little bit of a pullback up until October, and then since October the markets have just been ripping higher for 8 straight weeks. We've seen the markets go up as the volatility has continued to come down. So we are once again in a pretty interesting level at 13, 14. We did see a bit of a spike here in the last couple of days as the markets did pull back and then recovered back higher very nicely. So the VIX did kind of create that little bit of that fear, but I wouldn't be surprised if we do see the volatility spike again to 18, 20 levels going into 2024. And I mentioned this in our Discord that every single year the volatility is going to give you 1, if you're lucky 2, maybe 3 really serious buying opportunities. And that means when the VIX spikes, it is time to buy. When the VIX is high, it's time to buy. So we're looking for opportunities in the 20s, in the 30s, in the 50s for the VIX to get up to those levels, so we can start deploying cash. We can start dollar cost averaging, and that window of opportunity for buying is going to open up. And right now we're really low, so that's why I am optimistic, but I'm also cautious at the same time from a risk reward standpoint. Now going over to percentage of stocks that are trading above their 50-day moving average, we are now sitting at over 88%. So that means over 88%, almost 89% of stocks in the S&P 500 are trading above their 50-day moving average. That is a very, very strong trend. And what you'll notice is that every single time we are inside this red rectangle, sooner or later, there is a pullback, okay? So if today there is somebody out there that is telling you that a pullback is not going to happen, or there is not going to be a correction, or there is not going to be red days in the future, they're probably lying to you, or they're probably lying to themselves because they don't know any better. If you take a look at this chart, this is simple technicals, right? Every single time, right? Yes, it's possible that we may spend more time there at those levels. We may be elevated, maybe we may be overbought for longer, but eventually, sooner or later, we do see a reasonable size pullback, correction, bear market, whatever it is, we do see red days. And that is exactly the whole point, right? Our job is to assess the risk and the reward. That's it in any given market. Now, knowing what you know right now, how likely are you to go long and take long trade opportunities given that the markets are A, overbought, B, overdue for a pullback, C, majority of stocks have already moved up over the last 8 weeks? How likely or how probable is more upside from here given the marginal downside? It's less, right? It's not that favorable, and that is the only point. that I'm trying to make. That's it. It's all about the risk and reward. Yes, can the markets go higher from here? Absolutely. But how much risk does the market carry for that marginal upside? That's what we're trying to assess. And any given situation, that's exactly what we're trying to understand. Now, we also talked about how markets, when they were selling off here in the October lows in March over here, this right here was back in, of course, 2022. These were all serious, very good buying opportunities. And that's the whole idea. The risk reward was very good down there because the marginal downside versus the significant upside was very favorable on the long side. That's exactly why the risk reward was perfect over here on going long and deploying cash. And the exact opposite is also true. The risk reward is not that great. Now, that doesn't mean that you immediately start selling everything. No, it's just from a concept of, okay, do you want to be buying more shares on the long side? Do you want to trade more on the long side? The answer for me is not quite. I'm going to wait for a bit of a pullback, for this correction, for this dip, for markets to cool off a little bit before I start deploying cash once again. This right here is going to be S&P 500 stocks that are trading above their 200 simple moving average. So again, very similar to the 50-day. This is a little bit of a longer moving average. And again, you can see that we kind of hang up there for quite some time, but sooner or later, we do see a pretty reasonable pullback, pretty reasonable, dip in the markets. It is just inevitable, right? It's going to happen. The only question is when, right? Nobody really knows when exactly it's going to happen, but we know it's going to happen. This right here was the drop again. This right here was a drop again. So what makes us believe or think that this is not going to happen? It will happen. We just don't know when. And that's exactly why we need to be cautious in this market environment, considering the conditions, considering the overbought levels, technically speaking, that we're in. This right here, a very strong rally from the S&P, of course, 8 consistent weeks of green, which is quite rare, to be honest. And we're almost approaching our all-time highs at 48.16, 4800 pretty much. And that is going to be that next resistance. So 4800, next target, next resistance, and support level is going to stay put at 4600. So those right there are the two levels to watch, and the 200-point range within which S&P can be expected to trade over the next couple weeks. 4800 resistance, I have no doubt in my mind that markets can indeed achieve that all-time high, because it's also a psychological thing. Like, many people are really excited to see the S&P at an all-time high after over 2 years of consistent selling pressure. Of course, last year was a bear market. This year has been very strong. So going into January of 24, it's possible that we do see the markets kind of trade back up to all-time highs. But I would also be very cautious that after that happens, I would not be surprised to see a bit of a pullback, some profit taking, some rotation out of the overcrowded tech trades over to some other parts of the market as well. So something to keep in mind. And of course, 4600 is going to be that support. This right here is the S&P with the RSI and the MACD as well. And again, you'll notice that we are approaching those overbought levels. Once again, with the RSI, MACD, of course, consistently pushing higher with a very nice, higher highs and higher lows, the overall uptrend that we have seen. And of course, resistance is going to stay put at 4800. And of course, support level is going to be at 4633 for the S&P 500. And NASDAQ here also on a very similar trajectory. It's had 8 consistent weeks of green. So the next resistance is going to be over here. That's going to be in line at around 15,000. So we're going to call that 15,000 as the support right over there. That's going to be in line with this next resistance that we are watching. And of course, support level is going to stay put at 14,365, kind of in line with this green rectangle for the NASDAQ as well. Now going over to Apple. Apple here has also hit a new all-time high this year. So it's had a very nice momentum. Consistently been pushing higher ever since its October lows. It's been on a very nice, consistent, straight up rally to all-time highs of $198. More recently, though, you'll notice it started to pull back. Rightly so, because it was overbought, and it's also a little bit of that resistance kind of in line with this previous level. So can be considered a bit of a double top as well. So we're seeing a pullback, nothing to be crazy over, nothing to be concerned about. 189, 190, got a lot of confluence of support here, not only considering from a higher low standpoint, but also this previous resistance potentially acting as a new support for Apple at close to 190. So 190 is going to be that level to watch. And like I said, RSI is also starting to show some signs of a pullback, which again is very normal for Apple, considering how it was pretty elevated for this entire time. So this right here was how the RSI was overbought for a very long time as Apple continued to move higher. So there was a little bit of that negative divergence that is now starting to play through. So support level is going to stay put at $190 for the company. Amazon, on the other hand, you'll notice is also kind of pretty elevated on an RSI basis. So 64.70, it's kind of been hanging up there for some time. Amazon did have a very nice breakout. So in other words, this right here was a bull flag breakout. So pull, consolidation sideways, which is in other words a flag, and then another huge breakout for Amazon, and the next target is going to be 161. So that is going to be that next resistance and that next target. At 161, I could see myself selling some calls here for Amazon, considering how, again, overbought it would be, and it would be at a resistance. So it's possible that, you know, we kind of trade back up to this resistance and then start to pull right back down. And that's when those calls will start printing, because it's a hedge against potential downside. So that is going to be that next plan. And of course, 148 is going to remain a very strong support for Amazon. So 148 support, 161 resistance, and of course we got a couple more support levels here down in the 130s, down in the 120s as well. So a couple levels to watch, of course, for Amazon eventually, but I will be looking at selling some calls in the 160s for Amazon when it gets up to 160s. I'm not talking about strike prices, but when it gets up to 160s, that's when I'll be looking at selling calls, possibly up to 175 or $200 for Amazon. This right here, again, is going to be the RSI and the MACD included. Again, those are going to be levels to watch. This right here is going to be Tesla. And Tesla here, of course, has been on this pattern overall. A little bit of a widening wedge of lower highs and lower lows. Then more recently, of course, it started making this higher high and higher low. And then, of course, within the context of this uptrend, it broke down and then started making these lower highs and lower lows. And now it is once again making this higher high and higher low once again. So there's just been pattern within a pattern within a pattern within a bigger pattern. It's just been, that's been the trend for Tesla. I mean, there's just so many different trends that are happening within a much bigger trend for Tesla. But what I would argue is that it is still very much in the context of a broader downtrend. There's only two uptrends right now, which I could argue made sense before, which is this right here, the higher highs and higher lows, and then the shorter higher high and higher low right now. Those are the only two uptrends I could see for Tesla. But if you take a look at the downtrends, 1, 2, 3, 4, that's the downtrend, and of course a much bigger, much broader downtrend within which Tesla still is. And the reason I say that it's still within the context of this bigger downtrend, that is only because it's got a huge supply here. It's got a huge resistance in the 280s to 320s, right? So that $40 range between $280, $320, this is where there's a lot of supply. There's a lot of resistance. In fact, Tesla has not really traded above $300 in such a long time. So it's finding it very difficult to break out of this supply area, which is kind of marked by these red rectangles, you can see. So this right here, very, very important level of supply and resistance. So the moment Tesla breaks out of these levels, then I could, you know, confidently say that, okay, we're no longer in this downtrend. We're starting to make a new uptrend of higher highs and higher lows. But until that happens, I think it's kind of obvious that Tesla is finding it very difficult to break out of that resistance. And again, this is the overall sort of analysis. So the resistance and the, of course, supply is sitting right over here inside these green rectangles, excuse me, the red rectangles between 280 and 320. So going over to Meta platforms, and Meta here, you'll notice has also seen one of the strongest recoveries ever. This has been from October of last year. It's just been on a straight rally, 300% gain, maybe more. Left, of course, a couple gaps when Mark Zuckerberg kind of changed that narrative to an efficiency year, to saving cost, becoming more profitable, all that, everything that Wall Street wanted to hear. And of course, since then, the stock has not looked back at all. And more recently, though, it started consolidating a little bit, but now it's once again back in this uptrend of higher highs and higher lows. So we've got a resistance now at 353. So that's what I would be watching, and a support level sitting put at $330. So there's a $23 range, and that range is going to be over here. That's the range that we're talking. 353 resistance, support at 330, within the context of this very nice uptrend for Meta as well. And of course, if we, you know, the all-time highs sit well over, I believe, $400, close to $400 is going to be the all-time high for Meta. And one more thing I want to point out is the, of course, RSI and the MACD levels. We are approaching those overbought levels at 67, 68. And again, this is within the context of this uptrend. So if you do end up seeing a pullback, which again is a possibility, $330 inside this green rectangle is something that is possible for Meta, and then eventually making our way back up to $353. Now going over to Netflix, and Netflix also has seen one of the strongest recoveries. I mean, huge gaps over here for Netflix from 2022 bear market. And of course, very similar to Meta, the company was under a lot of pressure. And since then, it has done an incredible job kind of recovering a lot of those losses. The gaps have been filled. And more recently, it started consolidating sideways a little bit. So that's basically the broader range, with a resistance at 485, 486, and a support level at 348. So that's the range within which I would argue Netflix is still trading in. But a much stronger support, much better support is going to be now at this green sort of line That's the previous resistance now acting as a support at 485 with a very strong resistance at 572 for Netflix. Again, this right here is the overall consolidation. Next resistance, like I said, 572, support level at 485 for this company. Google, on the other hand, has also performed incredibly well in 2023, no doubt about it. And this is the overall uptrend of higher highs and higher lows. It's also been kind of, narrowing in on a wedge. And more recently, though, you'll notice that it's now starting to consolidate sideways a little bit, coming up to its resistance and this supply area at 144, 140. And support level is going to stay put at 126. So this right here is also a support level to watch for Google. So resistance at up to 144, support at 126 for Google moving forward. And again, this is the overall consolidation pattern. If it does break out, 150, 151 is going to be that next target and that next resistance to watch for Google. Talking about Microsoft, and Microsoft here also with a very nice overall uptrend in 2023, higher highs, higher lows. More recently, though, it started making this lower high and lower low, and then once again rebounded back up to very nice consistent uptrend, and it's now validating as support. So it's got three support levels that I want you guys to watch for Microsoft: 366, 340, and 310. Those are the three support levels to watch for Microsoft, with resistance, of course, pretty much at an all-time high at $384. That's exactly where we got rejected for Microsoft. So pretty simple, pretty basic. Of course, the lower the better. We want lower prices. We want cheaper prices. What do we want? We want cheaper prices. If I could buy Microsoft at $0, that would be the best thing in the world, right? So you always want to look for lower prices. That's where your margin of profitability is the highest. And last few companies here, Nvidia and Advanced Micro Devices, Nvidia, AMD, both of them have had a very fantastic 2023. This right here has been the overall recovery for Nvidia, with a massive gap still waiting and left to be filled in $340. We'll see, of course, in the future, eventually, if it does or does not come down to those levels to fill that gap. But overall, this has been the consolidation for Nvidia. That's between 400 and 500. So that's the $100 range within which Nvidia has just been basically trading sideways, right? It's come down 400, rallies back up to 500, comes down to 400, rallies back up to 500, and this is the overall consolidation for Nvidia. Now going over to Advanced Micro Devices and AMD, very nice move to the upside, overall uptrend. This is the higher highs and the higher lows. More recently, though, of course, downtrending channel, and then, of course, recovered as soon as the company announced that Microsoft, Meta, OpenAI are going to be using their artificial intelligence chips when they're launched, and, of course, more AI chips coming on board and online in 2024. Next resistance and target is going to be 156. AMD is one of my top stocks for 2024. I think it's going to do really well in that year, in my opinion, and 131 is going to be that support level. It is overbought, so 131, 112, and low 100. So those right there are going to be the three levels to watch for Advanced Micro Devices. Three levels of support and demand, resistance all the way to 156. A little bit of an overbought RSI and MACD, so I wouldn't be surprised if we do see a bit of a pullback for Advanced Micro Devices. So hope you all enjoyed this video and found it helpful, and a complete technical update on these Magnificent 7 plus a few more stocks. As always, make sure that you drop a like. Don't forget to subscribe, and don't forget to join our courses. Again, Santa Rally is going to be that coupon code, 50 to 60% off. This is our biggest sale of the year. And definitely do join our Patreon with members-only videos, Excel spreadsheets, and of course, Discord access with all the channels, including alerts as well. Happy investing, and I'll see you all in the next video.